Tap in. Time to tap in. Let's see who's getting exposed on Streets 99.3.
99.3, your choice of hip-hop and R&B. C-Dub is up in here, and I tell you, when I bring people in here in the studio, I want you to pay attention, okay? I'm not just bringing people in here for my help. I'm bringing people in here to help better your life, okay? To give you some information that you need. So all my small business owners, you need to be really paying attention today, okay? I got this lady here. She's a tax professional, a financial wizard, brains behind Brooks and Associate, which is a firm that's dedicated for individuals and entrepreneurs to navigate the complex world of taxes, bookkeeping, and financial planning. Ashlee Brooks is on our show. What's going on, lady? How you doing?
I'm good. How are you?
Good. Thank you for joining us on the show today.
Thank you for having me.
No problem. So for the people that don't know who you are and what you do, tell us a little bit about who's Ashlee, you know, where you from, what schools you go to, and how'd you get off into taxes?
Yeah. So Ashlee Brooks, of course, Brooks and Associates Tax Consulting Services. I am originally from Memphis. I always start off every conversation with that. But I went to Tennessee State and graduated in 2000 and something. But I've always been on the accounting path. So even in high school, I loved numbers. I was great at math. And so it was kind of a no-brainer when I went to TSU. My godfather went to TSU. So I automatically got into accounting. It was hard. So hard that I considered switching into marketing. But then I was like, that's not what I want to do. I really want to do numbers. So I graduated with my degree in accounting. Got introduced to tax while I was in school. So I've always done tax. It's always been somewhere in the background, and got an opportunity to work as a financial analyst. So I went in thinking finance and accounting were the same. Once I started working, it's like, no, they're very different. So the way that I tell people, because a lot of people don't know the difference. So accounting is really just looking at your numbers. They are what they are. Nothing can be changed about them. Whereas finance, this is when you hear people talk about budget, projections. Now you're going back kind of analyzing the numbers, and you're making decisions based off of the analysis of it. But the accounting is more so, these are the numbers. This is the financial history of what you have going on. And the more that I understood that, I liked the budgeting side of it because I'm big on financial literacy. But I didn't want to do the budget versus actual comparison. I really wanted to focus on the numbers. I really like tax. And so I got an opportunity. So I lived a couple of places also. So I graduated from TSU.
Go Big Blue.
So I lived a couple of places, but the last place I lived in before I moved back to Nashville was Dallas, Texas. And at this time, I was still working for the company as an analyst, but I wanted to just switch my career. You know, we were kind of talking before, you go and you talk to a lot of people, you soak in all this information, and I was trying to figure out, like, what would my next move be? How do I get back into accounting? And I randomly just reached out to this guy I seen on LinkedIn. I liked his background, and him and his partner had a tax firm. So he was just like, hey, you know, you can come in and start doing some bookkeeping. I had just had my daughter. So I did that for a little bit, and then I started doing taxes. So that's when I kind of got, you know, just sharpening the tools per se, working with more people, because I've always done taxes here and there, but I started doing more taxes with people I had no relationship with. Then I had an opportunity to move back to Nashville. Went back to the company that I was at when I was an intern. So now I'm doing taxes, I'm doing bookkeeping, I'm learning about small business formation, consulting clients on their businesses. And I said, okay, I really love this. And I kind of took it a step further. I got an opportunity to work in public accounting. That was totally different because now you're dealing with audits. So when you hear companies talk about, I need audited financials to get government contracts or to work with a certain type of vendor, they're going to the CPA firms for that. So I did that for a few years, and then COVID happened. So with COVID happening, I was stay-at-home mom. It felt like it. So trying to do the virtual teaching with the kids. It's tax season, so I'm working a lot of hours, and then I had my own clients that I was still trying to maintain too, and it became a lot. And I talked to one of my friends that went to TSU, and they were just like, are you going to choose what you're passionate about, or are you going to work for this company and just kind of stay in this box? I'm not a person that stays in the box. So I said, okay. And I kind of prayed about it, and I said, if this is meant for me, like X, Y, and Z would have to line up to make that happen. This was like on a Saturday. By Sunday, I made my mind up. I'm quitting my job. I'm gonna start my own business. And literally, as soon as I made the announcement that I was gonna start my own business, and I purposely tell people this number just to kind of show the growth within a short amount of time. I've always maintained like 30 tax clients. As soon as I went, and this was in 2020, so going into 2021, I went from 30 clients to 100 clients that first tax year. So that was my, and I analyze every year. So that was the year of, can you really do this? Can you sustain a business? Can you sustain financial stability for yourself and your kids? So I knew right then, like, yeah, you can do this. But I love doing it. And like I said, I'm big on financial literacy. So tax education kind of is coupled with that. So everybody has to file taxes without a question. I don't care what background you come from, your status, your class. Everybody has to do it. But now I get to educate people through taxes. So you have to file taxes, but now I'm helping you to understand taxes for people who owe, helping them to understand why they owe, how they do not have to owe. And then we're in that age where everything is on the internet. Everybody's a guru. So that's kind of where I come from too. Let's talk about practical solutions. And I want to give you education that's applicable to you and not just something that sounds good, but then when you get ready to apply it, it really doesn't work for you.
Right.
Or you apply it, but you don't know the other side of it where it can get you audited. You may not be taking the deductions, or it may not be applicable to you at all.
Okay, that's good, man. That's some good information right there. Thank you, Ash, for being here. If you guys got questions you want to know about taxes and all my small business owners, you need to be tapping in, okay, and paying attention because we got a list of questions. I had some people hit me up, slid in my DMs, like, I got a question. Can you please ask her this? I said, you know what? Let me get her on the show. Ash is here as our tax streets expert on the show. So I got a couple of questions. Can you provide an overview of the different business structures such as sole proprietor, LLC, and S Corp, and explain how each affects tax obligations?
So you always start off with the sole prop. Sole prop is super simple. That's pretty much anyone saying they want to start a business for themselves, but they're not really sure. It may be a hobby. It's just something where they're kind of making a little passive income. And with that, the pro is you don't have any liabilities in terms of dealing with the state. So you don't have to worry about registering with the Secretary of State, dealing with, the Department of Revenue. And it's simple. It's not really a lot that you have to do, but I would say the con is most people that have a sole prop, they commingle their funds, meaning they have a business, they're really not taking it serious, so they're not opening up the business bank account, they're using their personal money, and definitely when it's time to do taxes, everybody that I deal with, they're just like, well, I mix my money, so I'm not really sure how to track my expenses, that's separate from my personal. That takes a lot of time. So you have
business owners that have businesses, but don't have a business account.
Correct.
So they don't have a business account and a personal account.
Correct. And it's common, like it's very common. And when clients come to me, they feel like they're going to be judged about it. And for me, I let everybody know it's a common thing. The average person does it because most of us aren't good with money. When you look at your bank account, that's what you're working off of. You're not trying to think forward. You're not trying to think strategically. You are spending based on whatever your balance is. So to ask someone to say, hey, go and open up a whole separate account just to run your business out of, you got to build habit to get to that point. So that's a sole prop. So again, the plus about the sole prop is you don't have to do all the paperwork, right? The con is now you're liable personally. So if you're in a business that's risky, the example that I always give is like a lot of people are going into the apparel. They're selling e-commerce items. If a customer wants to sue you, now they're coming after your home, your car, your bank account, etc., because you have not split personal from business. Okay. Typically, I do tell clients if you're not really sure where the business is going to go, if you're going to generate revenue, where your clients are going to come from, start off as a sole prop. Get your feet wet. See if you really want to do it, because a lot of people are working and they're starting a business and they're like, I don't have time. Or I changed my mind. I thought I wanted to do this. I didn't. Or I thought I was going to get money. I thought I was going to get clients and I'm not. Now you've opened up a whole can of worms by going into these other entity types. So start off as a sole prop if you're unsure. Now, the next one, which is pretty common for most of us, is a single member LLC.
Okay.
Limited liability company. And pretty much that's the equivalent of a sole proprietorship, but now you're kind of formalizing the business. You're saying pretty much you're taking it serious. You want other people to take you serious. It's not looked at as like a mom and pop hobby type of thing. You do have to register with the state. You do have to register with the Department of Revenue. One thing that I found myself saying over the last 2 years, as soon as someone says, I want to start a business, I want to get an LLC, I said, do you have $1,000? And if they tell me no, I'm going to say start off as a sole prop and work your way up. And the reason why I say $1,000 is because you got to pay $300 in Tennessee, $300 every year to stay active with the business. That's number one. Then you have to pay, they've changed it a little bit, but business tax, depending on what your income is, you may have to pay that. Definitely have to pay franchise and excise tax. If you sell a product, then you have to pay sales tax. The list goes on and on all these taxes that you have to pay. Now your tax return has gotten more complex also. If you're not filing your taxes, you're paying a professional, they're going to charge you more. Why? Because your return is more complex now. That can add up to $1,000 quick.
Easy.
Right? So that's why I tell people, use $1,000. It's like your income threshold. And if you you have to have it every year to cover these taxes, no matter if you made money or not.
Yep.
And a lot of people get confused. Well, I didn't make any money, so I don't have to file. The government doesn't know that.
I'm gonna go on and be. I'm victim of that, and I'm victim of it, and I'm victim of 3 years.
No, I have more. I literally
and I'm sitting here and I found out like, wait a minute, I didn't make anything. So you get, like she said, it's $350 for that.
Yep.
And if you don't make anything,
still gotta file.
They're gonna charge you at least a minimum of $100 for that franchise tax and $100 for the business. And so you're looking at $600.
The other part is late penalties and interest now.
Yep.
And a lot of people don't understand. Sometimes you can get that way, but if you have a history of late filing, they're not waiving it. So it's just like, again, you're wanting to do this LLC because everybody tells you become an LLC. They don't talk about this side of it, right? But so that's kind of the pros and the cons of the LLC. The biggest part about the LLC is the liability. So if those customers wanted to sue you, they can only come after the business. They can't come after the personal. But with the LLC, you cannot commingle funds. You have to keep the personal and the business money separate. Because if you're sued and they see that you're mixing it, legally it's called piercing the corporate veil. But if from a legal standpoint, they're saying that you're mixing money, it's like, oh, well, you're looking at yourself as a sole prop anyway. Okay. So we're going to throw the liability out, and now we get to come after your personal assets. I did a IG Live with an attorney 2 years ago. And we hadn't talked prior to the live. She literally talked about piercing the corporate veil. And she said, I love when we have to go to court and we're going after a company, we go and look at their bank accounts. And we're waiting to see them transfer money, or they're using their bank accounts for personal or vice versa. We purposely look for that. Because as soon as we see
one little thing in there.
Yep. So again, the average person is mixing funds, right? But hopefully when you guys hear this, this is your red flag. I need to stop. I need to separate the two, and it's okay. And I let people know, just from an LLC standpoint specifically, a lot of people say, well, I didn't have money in my business account, so I did use my personal account to pay for something. That's not what you want to do. I tell everybody, transfer. Transfer is going to be your best friend. You don't have money in the business account, transfer personal to business. You need to pay yourself back. Don't take it out of the business. Transfer from business to personal. You got a good paper trail, right? The next one is you got a partnership. And with a partnership, you can go general liability or limited liability. General liability is not that popular because it's kind of like that sole proprietor where you don't have the limited liability protection. If you're sued, they're coming after everything. And now you're dealing with multiple people. Multiple people, things become a little more complex. So I let people know, once you start getting into the partnerships, the S Corps, the C Corps, you really do want to consult with an attorney. But then you got the general partnership. The limited liability partnership is similar. to the LLC for a single member. Limited partnership is just 2 or more people, but now you're forming this business. And the pros and cons of that, it really varies depending on how many people, depending on what type of business you have. And this is why I say get with an attorney. Do not try to start a partnership yourself, because you got to look at equity splits. You have to look at how much equity has been put in up front, who's putting in the money, who's doing the sweat and, the labor of it. So partnerships, if you hear me and you're considering a partnership, consult with an attorney. S-Corp election is the next one. And this one, when people hear S-Corp, that's all they hear, but it's really not a business entity type. You elected under a LLC or a partnership. So this is why you want to consult with a professional before you just outright say, I want to become an S-Corp. So with an S-Corp, this is not for everybody. And this is why I talk pros and cons. So with an S-Corp, you're pretty much putting yourself on payroll. That's the biggest part. And that's the part I forgot to mention. As an LLC, you cannot be on payroll as the owner. You can only take out an owner's draw. A lot of people don't know that is an IRS regulation, right? So with a S-Corp, now you're an employee of the business.
Okay, so let me ask you this. So if you're taking an owner's draw, are you getting, as the owner, are you getting taxed for that?
You're taxed on the profit, right? I like to put things in numbers to kind of make it very clear. So let's just say you're a single member LLC, and I have this happen all the time. So let's just say the profit is $10,000. And you got one client that's like, well, I didn't pay myself, right? You still got to pay tax on that $10,000 because the money's yours. Right. Nobody owns the business but you.
Okay. Right? So yeah, you still have to pay it to him.
Client B, well, I profited $10,000. I paid myself all of that $10,000. You're taxed the same because the money at the end of the day is yours.
Still profit.
So no matter if you say you paid yourself or not, that money is yours.
Okay.
It's yours. And what we call it is an owner's draw, because even if you let that $10,000 sit, you're going to pull from it at some point, especially if you have bills to pay personally. You're going to pull from that money. Yep. So it's owner's draw.
We on the show today. Ashlee is our Streets 993 tax expert. Man, we are getting, I got mad questions today. We getting all the information you need. So if you got some tax questions, make sure you gotta leave it in the comments down there. We get her back on the show and ask some more. What are the key tax deadlines that small businesses need to be aware of, and how can they ensure that they meet these deadlines?
The biggest deadline is the quarterly estimated tax payment deadline. So I'm speaking to business owners who have profitable businesses. Okay. Most people are not working with a professional until a tax situation happens, right? If you're getting a refund, you're going to go to like the small franchises, or you may file the taxes yourself. But once you start dealing with complex things, and especially if you file 1 year and you owe, now you want a professional to figure out how can I get this tax down, right? So the tax deadline, so you guys write this down, make a note somewhere. The deadlines that you want to keep in mind as a business owner, April 15th, I tell everybody, look at that like that's your second birthday. You cannot miss the April 15th deadline. This is to file your taxes or file an extension. This is the part people miss. If you owe, even if you file an extension, they're expecting you to pay what you think you're going to owe, even if it's an estimate, right? Most people are like, I don't know, like I haven't done my taxes yet. You need to look at your prior year. If you owed in the prior year, pay that same amount. Because if you don't pay anything, now you're about to be penalized for every month until you pay your taxes.
Oh my God. Jeez. You don't want to be in them predicaments.
You do not want, because once you get in it, it's hard to get out. So April 15th, June 15th, September 15th, and January 15th. Those are the four quarterly tax payment deadlines. And again, I'm not a stickler. I tell, as long as you're making some type of payment throughout the year, even if you miss the deadline, even if you missed it by a couple of days, something is better than nothing, right? Just think of when you're working with your friends or you're in a relationship, little effort, I'll take that over not doing anything at all. The IRS looks at it the same way. But April 15th is the biggest one. And then the other deadlines, depending on what type of entity you are. If you are a partnership, if you're an S-Corp, March 15th is the next one. So right now we're in we just started tax season on Monday, right? So we got March 15th that's coming up. So for all my partnerships, S corporations, you either file your business return or you file an extension. right? Now, the plus about that is you can file an extension and you don't have to pay anything. Because a partnership and an S corp, that goes to your individual return.
Okay.
So they just need you to file an extension. But once you get to April 15th, now as an individual, either you file your taxes or you file an extension and you make a payment if you think you're going to if you get a refund, the extension does not apply to you. Why? Because you're getting money back.
Right.
The IRS wants their money. So that's why they put these deadlines in place. And if you miss the deadlines, you get penalized because they want as much money from you as possible. But if you get a refund, no harm, no foul. File whenever you want to. You got 3 years to file your return and get a refund. But if you owe, you got more deadlines. They coming for you. They will come for you. And I'll say this too, when we're talking about deadlines, if you guys get IRS notices, and I'm talking to you too.
Okay. Any
notices that you get, do not take action on it. Always work with a professional. Do not, because most of the time.
For example, what type of notices?
Any type of notice. I don't care if it's saying.
Give me 2 or 3 examples.
2 or 3 examples. So I'll have clients, they'll get a notice and it'll say, hey, we reviewed your tax return. We've made an adjustment to your return and you owe X amount of dollars. Some people will get so freaked out, they'll just pay the amount. And it could be that the IRS is not right and they just needed some additional information. Right? It could be, hey, don't pay that. We may need to do a penalty abatement waiver, but and waive that penalty because you've had a good history of filing and paying your taxes. At the state level, the state is notorious for sending notices with estimates. I talked with the client the other day. We looked at their account. They owe $30,000 because they haven't filed. Guess what? Once we file those returns, they may owe like $300 or $100 because they're a single member LLC. You only pay that $100 that you mentioned earlier. But the agency doesn't know how much you owe until you file. So they're going to assess you based on your activity of your business in the industry that you're in. So a person getting a notice like that, you owe $30,000, they'll be like, oh my God, they're about to garnish my wages. They're about to put a lien on my assets. I need to figure out a way to pay this. Versus, let me go talk to a professional. Have them to review it just like I did yesterday. Oh, let me look at your account. Oh, you didn't file 1, 2, 3. Let's file those. Hey, you owe $1,000. Once we file these returns and you pay your $1,000, it's going to wipe out that whole balance. But that's me knowing how this works because I deal with it every day, right? Versus a taxpayer is just freaked out, and that's what the agencies know. If a person gets a notice like that, that's going to alarm them. They're typically not going to ask questions. I just want to pay this and be done with. Every person that I talk to says the same thing. I don't want any problems from the Department of Revenue or the IRS.
You don't want no problem with them alphabet boys.
They do not. So they'll be more happy to pay.
Yep.
Versus, let me do my due diligence. Let me talk to a professional.
What tax deductions are available for small businesses and how can they take advantage of them? And also, how many different codes are there?
It's thousands.
Thousands of codes.
It's thousands of codes. And that's what I laugh at too. Like when I'm on the internet or just on social media and they're like, these are all the codes and take advantage of them. If you do not own your own business, you can't take advantage of them, right? If you're not in real estate, you can't take, it's levels to taxes, okay? So when we talk about deductions, and I get this question from clients all the time, I'm going to tell you it's not a one-size-fit-all. The industry that you're in versus what I'm in, there's deductions that you may be eligible for that I may not be, right? You have tons of equipment in here. I don't have that much equipment. So for you, I may say, hey, you need to go and purchase things. When you get close to December, you need to assess your inventory and you may need to do some more purchases, whereas for me, I wouldn't give myself the same recommendations. So I simplify things. When I talk to a business owner, I tell them whatever you're purchasing, ask yourself, is this for the business? And if you can say yes, that's your write-off. Keep it simple. I'm not going to say, oh, supplies, office expense, professional. Their list is long. And guess what? It's not limited to just that. So purchase the things that you need for your business. And if you're trying to strategize, you need to get with a professional because now they're going to look at your business. They're going to customize the strategy to your business and not give you this generic, oh, go and purchase the G-Wagon. but you're a virtual assistant, right? Right? But
we see it on Instagram all the time.
All the time. But guess what? That makes sense for somebody that is in public speaking, right? Because they're traveling everywhere. They need to be presentable. I'm going to give this quick example, and then we can go to the next question. People talked about Trump all the time. They still criticize him now, but like when he was in office as the president, and we want his tax returns, right? Finally got his tax returns, I think, when he got out of office. And he's just like, he's a multimillionaire. He only had to pay $750 in taxes. He took advantage of all the rights. But the thing is, and this is why I have to caution people, he had the money to be able to take the write-offs. We talked about Tabitha Brown earlier. She mentioned that she purchased a restaurant. She took all these losses on the business. So you're investing into something. You don't know what's going to happen. You're taking a risk. She took a loss, and she said, that was a blessing for me because that loss really helped me out on my taxes, right? But she had the money to pay for this restaurant, to take the loss. Donald Trump had the money to purchase these businesses, whatever his assets are, real estate, to take a loss on that. If he didn't purchase these other assets, so the key is you got to have the cash flow to be able to take the deductions. If you broke, if your business is taking a loss, we can't talk deductions. How you gonna pay for something and you don't have the money to pay for it? How you gonna purchase? How you gonna purchase a G-Wagon? How you gonna pay the car notes
and the insurance and the maintenance?
But that's the part that people don't talk about, though, right? People talk about take all the deductions right now, take bonus depreciation, But if you don't have the cash flow, that's not something for you to focus on. You need to be focusing on how can I make my business grow, which goes back into that business entity type part, right? Don't go for this S Corp, C Corp partnership and you not even making $1,000 to cover the activity of the business.
Say it again for the people in the back. Can you explain the basics of sales tax and how it applies to small businesses that sell products or services, and what are some of the common pitfalls to avoid?
The biggest common pitfall, I'm going to hit the back end first, not filing your sales tax. I've been working with a couple of clients literally over the last couple of months. They were trying to do it themselves. They got overwhelmed. Why? You're trying to run the business. So what the key words you said earlier is you're operating the business. So when you're operating the business, you're not really thinking about the financials and all the other components of it, right? So the biggest draw is they forget to file. In Tennessee, you got to file monthly depending on what your revenue. So if you're making more than $3,000, you need to be filing monthly, right? So a lot of business owners that get overwhelmed and they're just like, they're not tracking their sales. They're not collecting sales tax is the other one. A lot of people are not collecting sales tax.
So let me ask you this. So for somebody who has a service, let me just use myself as an example. So Music City DJs, we're a DJ company. We provide a service, which is DJing for brides and corporate events and stuff. So you saying that I should add sales tax on that?
No. Sales tax is only for product-based businesses. You are selling a product, right? We provide services. So we don't pay sales tax. Now, we got other taxes that we pay. Yeah. Because we're LLCs, S Corps, all these wonderful things. But when you sell a product, just think of because I was thinking about the popcorn that everybody sells for donations. But just think of anything that we purchase. And if you look on your receipt, you see sales tax. We go to the grocery store, sales tax. The grocery stores have to remit their sales tax to the Department of Revenue. Why? Because they're selling a product. Okay. And the thing is, so I talked about the pitfall of not filing, right? So that's the first part. Then on top of that, you're not collecting the proper amount of sales tax. What I tell people when they find out like, oh my God, I haven't filed, I owe thousands of dollars. Technically, it's not your money that you're remitting to the Department of Revenue.
You collected it from the customer. And you're supposed to take and report it and you can give it back.
But guess what's happening?
They taking and seeing what's in the account like, I made some money. Let's go eat, baby.
They're going to spend it on the operations of the business, or they're taking it out as an owner's draw. They're taking it out as payroll. And now when I say, hey, you owe this much, now they freaking out. But so now I purposely tell, I'm big on education. So I tell clients that are in a product-based business, as you collect that sales tax, put it in a whole separate account. Keep it separate. And that way, when it's time to pay, you know that you've collected the money and you just remit that payment.
Okay, that's good. That's good to do that. Man, pay your taxes, man.
You got to pay your taxes. And I'm going to say this, because I do this thing, and I know we'll hit the contacts and all this stuff later, but I'm big on social media, and I purposely pull up celebrities, because every celebrity talk about tax. Every celebrity talks about paying tax, and every celebrity who doesn't pay tax talk about they went to jail, right? And you hear people say all the time, I want the Trump tax breaks. I want this tax breaks. Everybody doesn't have to pay tax. People have to pay taxes. It's just a matter of the strategy. And again, you have to have the cash flow to take advantage of the strategy.
We on the show today, man. We talking about taxes, man. I hope this information is helping you out. And if you got some questions, make sure you guys put the comments at the bottom so we can get this information, because I don't want to see y'all on the news, man. I don't want to see y'all on Scoop Nashville. You got your little face picture on there. I don't want to see you. So I got Ashlee over here, Brooks and Associates, to get on here to give us some information, okay? What are tax implications for hiring employees versus independent contractors or freelancers?
So I'm going to simplify it. When you think about employees, number one, employees are individuals where you have a set schedule for them. So just like when we worked in, any of us working in corporate, you got a set Monday through Friday, 9 to 5, you come in, you got certain things that you're supposed to meet, right? So that's an employee by Department of Labor standard. An individual contractor is a person that they can work at their own schedule, right? They can turn down work, they can accept work, they can work Monday, Wednesday, they can say, I'm working in the evening, as long as they're meeting the deliverables. Now, you got to look at the number of hours they're working and things like that, but that's a distinguishing difference. So with individual contract, if you're hiring people, period, I tell people, work with a payroll company. Don't try to take this on yourself. If you're not in accounting, if you have not done payroll, just like you're not going to pay a lawyer to be your doctor, do not pay somebody to handle payroll if they're not experienced in payroll, right? So that's the biggest part. When you're hiring somebody, be very clear. Am I bringing them on as an employee? And also know, if you bring them on as an employee, now you have to cover half of the Social Security, half of the Medicare. You got to pay federal unemployment. You got to pay state unemployment.
Elaborate on that a little bit more.
Okay, so just like when we work in corporate America, and most people don't look at their pay stub. They don't. I've realized that. So when you look at your pay stub, and I recommend looking at your pay stub periodically just so you can understand, because you can always find out quickly if you owe taxes by looking at your pay stub. But when you look at your pay stub, you got a section that says Social Security, Medicare as an employee, right? So you as an employee pay 50% in, your employer pays 50% in, right? Which is 15.3% total. So the thing is, if I'm paying 7.5, rounding up, the employer pays 7.5, that's a hit, but not a huge hit. As a business owner, I got to pay that whole amount. So 15.3% of whatever my profit is. And so now you pay that, but then when you hire other people, you're still having to pay that amount as well. But on top of that, if these employees, I had someone mention it yesterday, they had somebody they let go, that person's filing unemployment. So as a business owner, it's kind of like insurance. You pay in unemployment at the federal level and at the state level. So you're paying this in because at some point in time, if you let somebody go, that's the bucket that they're going to be pulling from. Okay. And that's going to make your rates go up. But it's like all of these measures are in place because of payroll. You're taking risk by hiring this individual, which is totally separate from an individual contract. The individual contractor, I pay you $1,000. That's it. I'm not paying federal taxes. I'm not paying state taxes. I'm not paying Social Security, Medicare. I just pay you $1,000. That's all I'm going to do. But the thing is, and this is where I like to tell people there's a difference between being an entrepreneur and a business owner. An entrepreneur, you're going to hire people, you pay people, you make your money. That's it. Business owner, now you got to get more strategic. Okay, I'm hiring somebody. Do I want a high turnover rate? I don't want a high turnover rate. Let me hire an employee. Let me hire somebody that's more experienced. Yeah, I may have to pay them more. I'm taking on this payroll expense, but this is less turnover for me, less training for me. So now you start looking at the cost analysis of things, right? So that's the biggest difference is when you're hiring somebody, what are you hiring them for? Are you looking for them to have a set schedule? or are you looking for them to work at their own leisure as long as they're meeting the deliverable? And again, I let people know, talk to a professional. Once you get to a point where you're hiring, especially if you're hiring multiple people, get with a professional. A lot of people, everybody's starting businesses now, so they have like fractional HR services. You definitely want to consult with somebody that's in HR though before you take it to the next level, because once you start hiring maybe like 5 or more individuals, now the Department of Labor can get into the mix. So you already got the Department of Revenue, you got the IRS, you said the Alphabet Boys. So all these other agencies now are starting to come into play the bigger you get.
Hey, entrepreneurship and being a business owner is not for the weak-hearted, okay? We are in here asking these hard-hitting questions because y'all need this information, man. I'm here on the C-Dub Show, and I just want to help and educate you guys so you can make that educated decision on what you want to do for your business. What records and documentation should I keep for tax purposes, and how long should I retain them?
Yeah, so quick answer is 7 years. It used to be 5 years, but just keep them for 7. And I will tell anybody, because I've had this happen too. So even if you work with a professional, save your documentation. A lot of professionals, we all use like client portals for security. It's housed there, but if you ever decide to part ways, their information is housed there. And if you are a true business owner, you're going to need your tax returns, right? So you want to make sure you're downloading those and you're saving them somewhere. I got some people that are, still old school and they still have the hard copies. I don't care. You just want to keep your returns for at least 7 years. From a documentation standpoint, if you are an if you're an employee for an employer, you keep your W-2s. Okay. Which the thing about that is, anybody who's worked for an employer, by the 31st of January, all W-2s and 1099s are supposed to go out to whoever needs them. So just like you get a copy, the IRS gets a copy. And this is something a lot of people don't know. If there's ever a point where you don't have that documentation anymore, it's 5 years later, the IRS is knocking on your door and you're like, I don't have a copy of my 1099 or W-2. You can retrieve that from the IRS website.
Oh, really?
Yeah, a lot of people don't know that. So I'll tell you about that site in a minute. But W-2s, 1099s, the biggest part is for business owners. For business owners, keeping your bank statements. And that's a hard one because people switch banks, they close accounts and things like that. Keep all of your bank statements. Bookkeeping, and I have been stressing this for the last year, is super important, especially if you are a profitable business.
What elaborate more in detail for the people who don't know bookkeeping and how important it is.
Okay. So bookkeeping is pretty much, think about your bank account. And this money is going in and out. You're spending it on your personal stuff. You're paying off credit cards. You're paying your mortgage. You're paying your kids' stuff. You're paying stuff for the business. In all of these different accounts. Bookkeeping takes all of this information and houses it in one place, but now it categorizes it. So now you can pull a report to say, how much money did I make? How much did I spend in expenses? Of these expenses, how much was personal? How much was business? How much did I pay myself? How much did I pay my contractors? How much did I pay my employees? If you just pull these transactions from your bank account, you won't know that.
Right.
But bookkeeping helps to track and organize all these expenses. And I'm anal, so I will spend a whole day breaking down my profit and loss statement to say, okay, how much did I spend in January compared to last January? So bookkeeping helps you to analyze your numbers, but it helps you really to understand, where are you financially? Are you making a profit? Are you making a loss? And now you can take it a step further to help you to make business decisions, but you need those bank statements, credit card statements, loan statements. All those statements that I just said is documentation you still need to keep, even if you're doing bookkeeping.
Okay, that's good to know. How can someone maximize their deductions for a home-based business, including home office deductions?
Yeah. Home office deduction is the biggest one. So obviously you have to be working out of your home. That's the biggest part. If you are renting a space, you can't typically rent a space and have a home office. It sometimes you can, but it'll get a little tricky. So I try to let people know, when you're dealing with the IRS, you really want to be clean cut. You don't really want to have murky waters where it's up to them to make a judgment call. You want to have all your documentation. So when we talk about people working from home, the plus is the home office deduction. And so with that, to kind of break that down, and I literally have like a little cheat sheet. So the expenses that you're going to look at is whether you rent or you own your home. You either look at the rent expense monthly. So you're looking at the total amount for the year of all these things. So it can be rent, it can be mortgage, it can be property tax, it can be renter's insurance. Definitely going to be your utilities, so the water, the gas, the electric. You're going to look at repairs of your home. So you get to take all of these, and this adds up to thousands of dollars, right? Just mortgage alone it could be almost $10,000, probably more than that. So you add up all these expenses. The thing that people don't understand is you don't take this full amount as a deduction. You take a percentage of it. So when you hear people, and as a professional, will ask, what's the square footage of your home? What's the square footage of your office space? Right? Whatever that percentage is, we multiply that by the overall expenses that I just named. You get to take that amount as a deduction.
Okay.
Right? So it's big. And the thing is, and I'm just stating this so people can know, especially in being educated, if they are talking to a professional or just trying to find one, the minimum deduction that you can take without providing all that is $1,500. So the IRS, and it's called a standard, I think it's like standard method for home office deduction, but you're pretty much just saying my home office is 300 square feet. Based on that, $1,500 will be the deduction. That's the minimum. I tell people to take it a step further and provide all those expenses so you can get a bigger deduction. I've had some clients, and it depends on the size of their home. They've taken like a $3,000-$4,000 home office deduction because of the size of their home, and those expenses add up. If you're sitting in a $500,000 home, $750, those expenses are going to be high.
That light bill alone, baby.
And the other thing I would say for business owners is the business mileage. Everybody hears about it all the time, just like you hear about home office expense. But with the business mileage, people aren't tracking it. So you hear about it, but then I'm like, well, where's your business mileage? Oh, I really didn't keep up with that this year. So you want to get some type of mileage app. Google is our best friend to everything. So just Google mileage app and find one that works for you. And as you drive anywhere, you just swipe left or right if it's personal or business. And now you're tracking where you're going, right? And so when someone comes to me this year and I say, hey, what's your business mileage? They'll give me a report. This person over here, I got to add it up. Let me go back and estimate. And now they got to sit down and try to remember last year where they drove. No, do a mile. January 3rd, I got my little report for the whole year of 2023.
How many miles you do?
Total miles is like 17,000. I hate saying that now. I feel like the celebrities. Like,
man, you said 17,000. I don't even want to see what mine gonna be like. 45,000. Everybody know I be driving.
Yeah, it's just like, don't say those numbers on the air. You don't know how it's gonna come back up. But I did that. But then that's the thing. I'm telling you the total mileage. So now, because I've been doing the swipe left or right, I can show. I do my own taxes, but I get to report of this. This much was personal. This much was business. That business, I get a deduction. And on average, it goes up with inflation. But like last year, the high of it was like 65 cents a mile. I think this year is 67 cents a mile or something like that. But that adds up if you're driving a lot, right? And people don't think about that. People do not think about that. The other side of it is actual expenses. You cannot take both. And people ask me, well, I've been, keeping my gas receipts. If you're not driving a whole lot, the business mileage is going to get you a bigger deduction than taking actual expenses. Actual expenses will be gas, right? The repairs, your oil changes, you purchase certain tires, you got major repairs on your vehicle, but you get to take a percentage of that. Going back to that home office, you get to take a percentage. And that's the part that people don't talk about. Oh, take these deductions. But it's just like, you don't get the full dollar amount. You get a percentage of that. And typically it's like 10 to 20% of whatever. So when people are telling you, oh, take all these deductions, one, you got to have the money, got to spend it to get the deduction, right? But then sometimes it's not worth purchasing the G-Wagon if it's only going to get you a 10%, 20% tax deduction. You done purchased this, $80,000 vehicle, and you're in debt just to get a 10 to 20% write-off. So I have a thing on my page. It's on Make It Make Sense Fridays or something like that. But these are the things that we talk about. And I think that's one of the posts. It's just like, don't spend money just to spend it. It has to make sense.
Yeah.
Gotta make sense.
What happens if someone owes taxes, and will they freeze all their money?
It's levels to owing taxes, okay? If you owe less than $50,000, okay? And I got clients that owe more than that, and they not in jail. But if you owe less than $50,000, you're going to get the letters, you know, the threatening letters. If you don't do this, we're garnishing your wages. We're taking a lien out on your assets and things like that. Set up a payment plan. Just set up a payment plan. Typically, I found people who owe a lot of money, they're filing their own taxes. So they're not aware of these deductions that I just mentioned. And I don't expect for them to be like, they're not studying tax law and the changes that happen every year. But the biggest part is, and I said it earlier, but if you get a notice, get with a professional so they can explain to you what that notice means.
Right.
I get them every year, and it can be a quick 5-minute discussion. And 9 times out of 10, it's either not taking action on it, or it may just be, hey, just pay this penalty and be done with it, right? But if you do get a notice, again, if you're in that less than $50,000 range, you just want to, if you know that you owe the amount, seriously, set up a payment plan. It's something called an installment agreement, and you can either file one with your tax return, current year, so we're in the current year right now, or if we're outside of the year, just contact the IRS and say you want to set up a payment plan, and they can do that. And the plus, and I say that because I'm like, it's not really a plus, but the plus is they give you up to, they give you up to 7 years, 6 years. They give you up to 6 years to pay off the amount. That's not ideal because you don't, just like a credit card, you don't want to pay the minimum amount because all of it is going toward interest and penalties. But they do give you 6 years to pay off the amount.
Okay, got a question. Business made $100,000.
Yep.
Okay.
100,000 revenue or profit. There's a difference.
let's say for easy math, we'll say profit.
Okay.
So all the expenses and everything is already taken out. Okay. So you got to pay the taxes on the $100,000. Okay. You need to make payment plans on this. Okay. So obviously I don't want to speak on everybody, but you say hypothetically you can't pay that in them 12 months.
Yeah.
So you have to pay it, some of it next year. So are you double behind in owing? No, I guess I'm going to say,
because you're trying to pay the current and the previous year. Yes. And what happens is, and to break this example down, so
or however you put that on your taxes, say, hey, this money went to paying taxes.
No, but let's use years. So 2022, because that just passed. You filed taxes, you had $100,000, you got to pay tax on it. Let's just say you owe $30,000, 30% of that, $30,000. You like, Ashlee, I can't pay all this right now. This is where I would say do your payment plan, right? So you take $30,000 divided by 6 years. I'm not doing that math, but whatever that monthly amount is, you will pay that monthly amount for 6 years. I tell all my clients that it's not the goal. Because most of that is going to go toward interest. The payment is going to go toward interest. So you got 6 years. This
but you don't want to take the whole 6 years.
But you want to pay this thing off quicker as possible, right? So you got 2022. You owed this $30,000. Now we are about to file for 2023. So what you're saying is, Ashlee, I owed. So you telling me that I'm going to owe again? Now it does build up. It's going to compound over time. So if you make the same amount of money, you owe $30,000 for 2023. Now you owe $60,000. Right? So this is the thing. You asked me earlier about what are the deadlines I need to know about, right?
Right.
This is where quarterly tax payments come into place. This is why I talk financial literacy. You don't want to keep going into the burning house. You know that you're going to owe taxes every year, and you mean to tell me you're not going to do quarterly tax payments? You just going to keep waiting until it's time to file? And I tell you you owe $30,000. Okay, just add it to the payment plan. You just going to keep letting this. Now you're digging yourself into a deeper hole. What you could do is say, okay, I owe $30,000 in 2022. I got with my professional. She's telling me I'm probably going to owe the same thing. If I don't do anything else, let me break that amount into 4 payments, them 4 deadlines. I'm going to make a payment every quarter. So now when it's time to file taxes, hey, you owe 30, but because you've been proactively planning it through the year, all you got to worry about is this 30 back here that you've been making payments on. Right?
Okay.
So that's the goal. If you know that, and a lot of the clients that I'm now working with, they're literally in that situation. They come to me, Ashlee, I've been on year over year over year. Cool. Let's get this cleaned up. We're going to draw a line in the sand. For 2024, we can't do nothing about 2023. Whatever you owe, we're going to do an installment agreement, get you on this payment plan. If you owe taxes before then, we're going to consolidate it all. But for 2024, let's do it right. Let's do some tax planning. Let's do some tax planning. Let's be proactive and identify what we think you're going to make. Let's estimate what these quarterly payments should be, right? Hey, April 15th, make your payment. Every quarter, you're making a payment. And again, if you miss the deadline, I got some clients, Ashlee, I ain't got the money this quarter. Cool, but at least you know the amount that you think you're going to owe. So you can be either putting that money to the side or you could be making that quarterly payment. But guess what? When it's time to file taxes and I say, hey, you owe this much, I got it. Why? Because we've talked about it. Right. It's not a surprise. You still working on your payment plan back here. And then it looks good for the IRS because they're like, hey, you've been making this payment plan, but you doing better now. And that's why I say it go back to people what I talked about earlier, the effort. As long as you see someone's making effort, you willing to give them a little more grace, right? IRS, same way. You making your quarterly payments. Yeah, you owed in the past, but you're doing better. You getting on the right track. So now if you go to the IRS and say, hey, I really can't afford to pay all this, they'll be more willing to work with you. Why? Because you've been making the effort to pay. The extra initiative, you've been making those quarterly tax payments.
Man, we getting the information, man. We are spitting gems on the show today. Ashlee is our Streets 993 tax expert on the show and helping you guys. It's tax time. You need this information, okay? I promise you, I don't want you to be in no tax problems, okay? All my small business owners that's listening, paying attention right now, we on the show talking about taxes. How can someone reduce their tax liability through retirement plans and other tax-deferred investments for themselves and their employees?
I love these questions. It kind of goes back to what I was alluding to at the end of the last question, tax planning, right? So when we talk tax plans, this is where you get into the, self-employed retirement plan, the solo 401ks, even a 401k with your job, right? And I like to give examples to simplify things. So you're working a full-time job and you got your business. You come to me and you say, Ashlee, I've owed taxes every year. First thing I'm going to do, let me look at your pay stub, right? You hear people talk about W-4s because you got to complete that when you start the job, right? That determines how much tax come out. So I'll look at your pay stub and I can know instantly if you got enough taxes coming out. So that's the first thing.
And how can you do that?
I can't tell you. That's why I'm a professional and people pay me for this.
You go see Brooks and Associates.
So I can look at the pay stub. So that'll be the first recommendation. Like, hey, you're not having enough tax come out. Oh, let me look. How much money you got going into your 401k? You don't have enough money going into your 401k. If you put some money there, that's pre-tax dollars, right? So if you're taking your money, putting into this pre-tax vehicle, that reduces your taxable income. You made $40,000. I tell you to put 10 into this 401k. You pay tax on 30, not 40,000. Right now, it's pros and cons to that people don't talk about. So the pro is you save taxes now. The con is whatever your tax rate is at retirement age, you still got to pay tax on that 10. You put into that bucket
when you pull it out during that time.
And so this is where so remember I talked at the beginning about accounting and finance and how they're different. This is if you talk to an accountant versus a financial advisor, we're going to give you different strategies because we need to know what's the goal. Is the goal for you to make changes now? If that's the case, you talking to me. If you're trying to make goals down the line, investment strategy, retirement strategy, you talk to the financial advisors because they're thinking more long term, right? That's the whole point of them. So with tax planning, again, we got the example of when you're working with the company. Now, as a business owner, this is that we really need to talk retirement. One, because you don't have one anymore, right? The company's not contributing. You got to contribute yourself. So the government gives you an incentive. And this is where people talk about the government is really pushing business owners and real estate. because these are the things that make the world go round, right? So if you're a business owner and you help the economy, the incentive for you is if you put money into this retirement, we're going to give you a deduction for that. Okay. So now it's not a dollar for dollar deduction. And depending on the retirement plan, like one of them that's very popular is called the SEP, SEP, Self-Employed Retirement Plan. But you can put money in there, but you only get like a 25-cent deduction on the dollar. 25 cents on a dollar, but it's 25%. So it may not make sense all the time, but if you are like at like that 100,000 we talked about, you like, Ashlee, I'm making 100,000 in profit every year. You got the cash flow to put money into that retirement, right? So people are like, well, I don't want to put money into blah, blah, blah. My go-to quote is pay yourself before you pay the IRS. I would rather you put money into the retirement account, which is yours, even if you can't touch it right now, than giving it to the IRS. At least you're putting money into something that you can use at some point in time. Yes, long term, but once you give it to the IRS, it's gone. Right?
Yeah.
But by you put money in there, you get tax deductions for that. That's like one of the bigger ones. The other things that I talk to people about is like a health savings account. That's another pre-tax thing. Again, if you're working for a job, a 401k. Now we get into the strategies of a business owner, the equipment. When do you purchase? Do you purchase just because the G-Wagon? Do you purchase that just because? Or do you be strategic and say, I made $100,000 this year? Instead of me paying $30,000 to the government, I'm going to take that $30,000. I'm going to go purchase this business vehicle. I'm going to go purchase this software, this equipment that I've been wanting all these years. I got a business owner. He's in the apparel space. He's trying to buy equipment, and that equipment costs thousands of dollars. I may say, hey, don't purchase that in 2023. You made more money in 2024. Purchase it then. Because strategically, it makes sense, right? I tell clients if they have a net loss, more expenses than income for the year, I'm not going to tell you to go purchase the G-Wagon or go purchase the equipment because, again, you're already in a loss position. And this is the thing a lot of people don't know. You only pay tax on the money that you make, the profits. If people come to me, well, I took a loss on the business, you don't pay tax on that. 0 times 0 is 0. Right. But a lot of people don't think that. So if I had a client, we went back and forth last year. They were already in a loss position. They wanted to purchase a vehicle and depreciate. Depreciation is you taking the full value of it as a deduction that year. And I'm like, that doesn't make sense. You're already taking a loss. Why? You don't need it. Well, I want to take it anyway. And I'm not going to get into the accounting parts of that, but now they're dealing with, they should have listened to me because now they're going to have to pay tax back on the money.
What?
Yeah. So you and this is why I say again, yes, it can be expensive working with a professional, but you see why it's worth it. Like it's so many different moving pieces and you can't just look in things in silos. You have to look at the big picture. And then and I tell my clients that you do tax planning 1 year, you need to do it every year. Tax planning is expensive. I'm not going to lie to you. But if I do tax planning for you and that saves you thousands of dollars, would you rather save thousands of dollars and pay a professional or just take your L and pay all this money to the IRS?
And try to figure it out yourself.
That part.
Don't do it. Don't do it. What are the common tax mistakes small business owners should avoid, and how can they stay in compliance with the changing tax laws?
Everything that I just said. Seriously, everything that I just said. But what are the common mistakes that taxpayers are making? One, missing a deadline. A lot of clients that I have been getting, they're coming to me because they need to purchase a home. They need to purchase a home and they have not been filing their tax returns. And now it's like, I need my returns yesterday, right? They need some type of financial lending. They ain't paid no
taxes?
This is a comment. Like, that's why I say when people come to me, I don't judge, because at this point, I've been doing this for over 10 years. I've heard stories. And now when people be like, I'm your worst client, I haven't filed in 5 years. I'm like, I've heard worse.
How do you think that that's okay to go 5 years and
this goes back to financial literacy, right? If you're not financial literate, when you come from a certain background, and these are the things I'm even learning about myself, we deal with scarcity. So you want to hold on to every dollar. When you think about the IRS, it's a negative thought, right? When you think about taxes, growing up, all we knew was refund, right? I had to tell a client yesterday, I did her tax return, and I'm like, hey, your refund is X amount of dollars. What? Ashlee, you lying. I thought I was going to get more than that. And I have to stop myself because I explain things as though she...
Why do you think that you was going to
I'm going to tell, but no, I understand why, though. And that's what I'm saying. I get it, right? If you have been taught growing up, taxes equal refund, and you don't get a refund, you like, where's my refund? But I'm educating people. Typically, a refund means that you've had too much taxes withheld from in this person's situation, from their paycheck, from their job, right? So she was just like, well, I got a bigger refund. I said, that's because you paid more in taxes. I said, let me break it down to you this way. Would you rather get more money through the year and not get a refund? Or would you rather pay in way more taxes, your take-home pay is smaller, just to get this refund? Well, nah, I'd rather get my money through the year. Exactly. So that's what I'm trying to educate people on now. The goal is not a refund. The goal is to get your money throughout the year like you're supposed to. And whatever taxes you owe, we want to break even on that.
Right.
There is not a person that files a return that's making money where they don't owe any tax at all. Not a one. And if you can find them, that's because they're rich and they're strategically taking losses. So they're purposely losing money not to pay taxes. Elon Musk with Tesla, couple of years ago, sold a whole bunch of stocks. As an accountant, I'm like, he owes taxes. He's fine with taking a loss. He's gonna take an L on all them stocks, just not to pay. Jeff Bezos, I think, didn't take a salary. So you willing not to pay yourself because you know you're gonna be taxed on that money more than your real estate over here. You're going to take a loss on Amazon because you got this real estate that you may have to pay a little tax, but it's not as much as what you're paying through these other sources of income. So using the lady as an example again, she wasn't happy that she was getting a refund, but like I told her, you paid in what you were supposed to. Right? And you still had money throughout the year. The people who typically get refunds outside of the overpaying are your low income people. The government gives you these incentives. You hear about the earned income credit, right? That's the biggest one, is the earned income credit. And that's people that's typically making like $20,000 or less. And the income goes up with the number of children that you have. But who wants to be in that situation? Right. You want to be a poverty level just to get a refund?
Man, that's the wrong mindset. What about, I've seen some people also that they take their... they go to the HR and they get their taxes cut off. Yeah. That is one thing I do not understand.
Okay.
Why do you cut your taxes off when you have paper trail that Uncle Sam sees? Hey, you got paid this. Yeah. You're not paying no taxes. Yeah. But I know you got paid this. Like, why do people do that?
So I'm guilty.
Really?
I'm guilty. When I first got out of TSU and I got my first little corporate job and I'm making as much money as I've ever made before, we getting our little bonus, performance bonus, March of whatever year it was. And because I didn't know any better, and that's why I say you got to get a professional and you got to understand their background. When they first start doing taxes, you just punching in numbers. You don't understand the behind the scenes of how all those calculations are happening. Right. Now, I can break a whole tax return down for you. Back then, I couldn't. So even though I was doing taxes then, the goal was to get a refund. It wasn't to understand all this stuff I'm telling you. So I was at work and all my coworkers were like, we about to get our bonus. Make sure you go change your W-4 and do exempt so you can get all of your money, right? Remember what I said about the client. We want all of our money. We don't want to give. So, yeah, you're thinking long term. Like, at the end of the day, you got to pay something to the IRS. Yeah. That's not how the average person thinks.
Like, I used to get like an extra $100 taken out every pay period.
But you're a good steward.
Okay.
Right?
I'm different.
The average person who's not financially sound, you're just trying to make ends meet. That's just like a car note. When you broke, you're going to put that car note. That car note is due. You're liable and responsible for that, but you're just trying to pay your rent. So you're going to let that car note slide, right? Same thing at work. I'm just trying to get this money to pay my bills. I'm going to worry about that later. But guess what happens? Everybody at
8 months,
time,
10 months, 11 months go by.
And for me, I didn't know any better because I didn't understand the exemptions. I just knew I wanted my money. Mm-hmm. I wasn't thinking about the taxes because we only think about tax one time a year. We put off for as long as we can. That's why I'm just like, a lot of it's just our mindset, where we are financially. So when it was time for me to file my taxes, I owed $2,000. Now I can be like, okay, $2,000, it ain't that bad. But back then, I'm like, oh my God, this gonna take me 2 years to pay off $2,000. Like, I was stressed, but that was my first and last time doing that. But I'm glad I got that experience because that's why I can explain it to you, because I was in that position. So when other people come and talk to me about that, I understand. But now I'm going to educate you to say, and this is why I say I try to simplify stuff as much as possible. When I talk to people now, and I have clients, I look at their pay stub and I can tell you instantly, hey, you're going to owe, right? Why? Because they're doing that exemption thing. So when I look at the return, now I understand you're doing this because you're trying to get all of your money. And I remember a couple of years ago, I had introduced tax planning to a client. They weren't familiar with it. One of my recommendations was you need to adjust your W-4. You need to have more taxes come out. So when they got that, they like, Ashlee, you sure you know what you're talking about? My take-home pay, I'm barely making it. It's okay. Just trust me. When we got ready to file those taxes and they didn't owe, they forgot about everything else. But it's because you trying to think about the now. I got to get you to think about the bigger picture. And again, what people don't understand, I want my money now. So what I tell people is you're going to deal with it on the front end or the back end. Which one do you want to do? Do you want to deal with it on the front end and you pay your taxes and you have lower take-home pay, but your taxes are covered? Or do you want to get all this money now and deal with it on the back end? And I tell you owe $3,000, $4,000, $5,000 that technically you're supposed to pay at one time. I'm going to take the front end and you just take out a little bit. Take out a little bit of taxes. I'll make the take-home pay work. But at tax time, I want you to tell me that I either owe a little bit or I'm getting a refund. It's education,
yeah,
right?
It is. You know, I'm hearing some people they'll cut it off from January to June, and then cut it back on. I'm gonna even out.
And guess what they'll do? Forget.
Yep. When you should just left it alone.
And I'm gonna kind of tie the bow on this one. You also have people that take money out of their retirement throughout the year. Same situation. They take money out because they need it. And this is why I'm like, people have to start figuring out a way to get in a better financial situation to get out of this cycle. So you'll have people just like they take the exemption so they don't have any taxes coming out. You also got people, and I did it too, right? I took money out of my 401k. Oh, I got to move. I just need some money right now. And you hear the financial advisors, don't do that. But you're not thinking about the long term. Especially when we're younger, we thinking about right now, right? I took that money out once again. I did my own. Oh, Lord, I owe another $2,000. But I learned. But for me, I didn't regret it because I really needed that money. But you have people really using their retirement account like it's a bank account. I had a client some years ago, and I felt so bad for her. She would take money out of her retirement every pay period. And I'm like, girl, you like, because now you pay 10% penalty every time you
take it out.
Yeah. And so it's just like every year she was owing. And she's like, why do I owe? And not only are you taking this money out, but now you're increasing your income. You don't look at it like that because that's your retirement money. But if you may, and I'm just making it up, $10,000, you take out $10,000 of your retirement, you pay tax on that full amount of $20,000. And so this particular situation, they were making $70,000, $80,000. So if you taking out $20,000, $30,000, that's bumped you up to $100,000. You in a whole nother tax bracket. And is it worth it?
Oh my God. We on the show today, man. I hope you guys are getting some information, man. Thank you, Ashlee, so much for being on the show today. Our streets expert. How can people get in contact with you, more about taxes, and even become a customer of you?
Yeah. So So I'm super active on all social media platforms at this point. At TaxBawse, TaxBawse. That is my handle. I respond all the time, so you can DM me for any questions. If you want to book a consultation, there is a link within the bio where you can book the consultation. And I'm just check out my social media page. I'm big on tax education, so all this information that we just talked about, I literally put up a post every single day, just kind of trying to break things down, simplify things. But you got additional questions, you want to book a consultation, reach out to me on all the social media platforms, TaxBawse.
Also, make sure you guys follow me as well at I am DJ C-Dub. That's at I am DJ C-D-U-B. And make sure you guys are following Streets 993 on Facebook, Instagram, and YouTube. And subscribe to us as well. All right. Thank you, Ashlee, for being on the show.
Thank you.
This door is always open. I know we're going to be hitting tax time again this time next year. And we're going to have you on the show. And if you guys got any questions, you guys can hit me up, slide in my DMs, hit her up as well. Yeah. And I get some more questions. We're going to probably get you back on here in about another 30 days because people trying to get their tax stuff together, okay? So probably right on 1st of April. Around 1st of April.
I honestly would say probably March 15th.
March 15th?
March 15th is where people are like, oh my God, I only got a couple of weeks left. And it's like, that's when the
last little bit. So hit us up with your questions. We'll get you back on the show. Thank you, Ashlee, so much.
Thank you.
And I'll see you guys in the next video.
Follow us on social media at Streets993 and check out more interviews online at Streets993.com.